Hello and welcome to this month's Grow Your Law Firm webinar on the numbers and the topic that you can really build a profitable practice. This webinar today is going to be a little bit different to the webinars that we've done in the past, whereby I've asked one of my clients to come along and run through with me some of the actions and activities that they've been doing in their firm to really turn their numbers around. So once again, what we're focusing on today is we're focusing on the business planning part of a financially well organised strategy. So what we do here at FWO Chartered Accountants is work with our clients to ensure they are financially well organised, and part of achieving that goals with legal firms is to ensure they've got the right strategies in their business to drive their profit and cash flow. As a lawyer's accountants, the services that we provide to our clients around their annual accounting services, financial services, our FWO Growth Club, and stay on the line for the end of this webinar, and I'll be talking to you about a very exciting new product that we are launching at the end of this week as the major sponsor of the Queensland Law Society Symposium, growyourlawfirm.com.au. So just watch that space. And some of you may also have or have been aware that I've written a book called The Revenue Revolution for Law Firms, which basically covers off in a lot more detail all of the strategies that I run through in our Grow Your Law Firm webinar series. That can be purchased online at financiallywellorganised.com. So enough of the advertising. Let's get into it. So what I'd like to do is, first of all, introduce you to Mel Cox, who is the Managing Director of Property and Development Law in Airlie Beach in Queensland. So welcome, Mel.
Hi, Matt. Thanks for having me today.
My pleasure. So, Mel, what we're going to be having today is a little bit of a conversation around some of the things that you've been doing in your firm over the last 6 months. But just so that those listening in on the webinar today can get a bit of a feel for your practice and see that their practice probably isn't terribly different to how yours was. Just give us a little bit of an overview about PDL.
Okay. Well, our practice is made up of 7 people. There's 2 directors, Stuart and myself, and we our history has been around development and conveyancing. Our main services and our main focus now is on our conveyancing, which would make up about 50% of our business, and property development would be about 30%. Leasing, business and commercial would take up about 15%, and we do a small component with our wills and estate planning. With our fee earners, we have 3.5 fee earners plus Stuart, a director as well. So I guess, out of the 7 staff, we have 4.5. Sometimes we go to 5 for fee earners for our productivity. As far as challenges, we have had all the usual challenges, which of course profitability has been a major challenge for us. Productivity is something that we didn't focus on before but was a challenge. Valuing our own services and our hourly rates just were poor because we weren't very good time recorders, and therefore at the end of a matter we didn't really see the true value of our service. Yeah. Finding the right people for our firm as well has been difficult, and just making the wrong decisions because we don't have the information. We hadn't been recording information to make the right decisions.
Yeah, so Mel, sounds like you're just a normal firm. The firms that I see have exactly the same issues, and I'd expect that the majority of those firms that are listening in today also have those issues. So just before we go on, I just want to get a little bit of a feel for who we've got listening in today. So for everyone online, I'm just going to run a few little polls. I just want to get a little bit of a feel for the size of the firms that you're working in today. So your sole practitioners, 1 to 3 principal firms, or 3+ principal firms. So just take a minute, click on the one that matches you, and it'll give us a really good feel of that. So just another couple of seconds. Thanks very much. So today, listening in, Mel, we've got 37% sole practitioners, and 34 are in that 1 to 3 principal firms. So roughly 2/3 of our firms here are in the normal, when I say normal, the majority of firms in Australia. So 95% of firms in Australia are 1 to 4 principal firms. We've got just over 70% listening in today, with 29% being 3+. So thanks for that. Next, just let me know what best describes you. Are you principals, are you solicitors, or non-principal CEOs, or practice managers? So just another couple of seconds there, which is great. So we've got, listening in today, about 57% are principals of firms, with 17% being the CEOs and practice managers. And for those solicitors who are non-principals listening in, welcome as well. So lastly, just want to get a feel for whether or not you've attended a Grow Your Law Firm webinar before or not, because some of the things that we're talking about today we've covered off in previous webinars, and if you want to get hold of those, just go to financiallywellorganised.com and you'll be able to get a recording of those. So thanks very much. So we're roughly 50-50. So for the continuing participants who've been to a webinar before, thank you very much for your continued support. And for the new people who are listening in today, welcome. And as I said, you can go to financiallywellorganised.com and get a copy of all previous webinars. So Mel, let's get into it. I want you to tell me what your practice was like 6 months ago. You and Stuart saw me, I think it was in about October last year, and we had a really good conversation about your practice and what you were looking to achieve. I just want you to give us a little bit of a dosage of truth there. You know, what were you worrying about? What were the real issues at that time, so that we've got a good base there.
Okay. Well, during that time, cash flow for us was what we focused on a lot, because it was always tight. Cash flow has always been a problem for us. We also found that when we were looking at our figures, we were looking at them in a retrospective manner, that we would look at them at the end of the month, and we weren't really in control of how we got to that figure, and we didn't really understand our numbers and how we could achieve goals. We weren't accurately measuring our KPIs, and we didn't have any method that we could logically assess our performance within the firm. So as far as anything that we were planning, we would have very long discussions, and they were often based on our vibe and not on any really valuable data that we had collected. So we were finding that we were, constantly thinking we were making the right decisions, but they were on inaccurate information.
So Mel, would it be fair to say in your firm, you were very focused on the doing of the work, but you weren't focused on really getting a clear picture around what the right strategies were where you need to be focusing your energy into?
Yeah, we were very focused. Both of us were working in the business, so we were very focused on doing the work, and we weren't really focused on the efficiencies. So all we thought about was we needed to get more work in, which meant that the more work we got in, the more we duplicated our inefficiencies, and we just didn't see them there. We just thought we need more we need more people available to help us get the work done.
And And an interesting recollection I've got from those initial meetings is that you and Stuart were so proud of your efficient production systems, particularly
Mhm.
around conveyancing, which are great. They're great
Yep.
systems, by the way. But what I recall is your focus very much was on driving those systems. But what we then talked about was getting your focus in the right areas to make changes to the drivers that produce the profitability and cash flow.
Yep. Yes, that's right. We were focused on systems, and we would spend a lot of time on systems, and often before we even had the work. And some of the work that we were focusing on was a supporting product, but the work we were putting into it, the result wasn't going to be worth it for us.
Yeah,
So when we sat down with you, we actually really refocused on some quite valuable work that is coming in through our firm, and we didn't really realise what our core services were and the value that they had for us. We were sort of busy looking, in other directions.
yeah, exactly. So, well, thanks for that. I'm just going to now run through a little bit of theory, I suppose, just to set the scene for everybody that's listening in before we launch into a bit of more of a conversation around some of the actions that you have gone and implemented in your firm, which have really, really, and I've seen it firsthand. They've really turned you, I think, in property and development law into a very dynamic, well organised, well structured business. So let's just step back a little bit and just go through a little bit of the theory. So so the main issue I see in firms is that relationship between uh, the amount of labour costs that they incur in terms of doing the work. So the direct labour costs, not in terms of practice managers. So the practice managers who are listening in here today, jobs are safe. But in terms of the fee earner labour cost and the amount of revenue that's generated out of it. And often I see in firms there's this relationship between how much revenue could we generate, being our capacity, and how much revenue are we generating. So out of the labour cost that we incur, we have this massive amount of revenue that can be generated, but the actual revenue is so much more. So if we look at that cost is the only real input that we have in terms of doing the work. It's the cost of labour. So what we've got to constantly focus on is to be efficient in terms of ensuring that we are maximising, not to the extreme, but maximising the amount of revenue that we are actually earning out of the capacity, out of the labour cost that we incur. So when I go into firms, I do that analysis. I have a look at what's the capacity, and I have a then look at what the revenue is, and that often then tells me a story. And I say to firms, what you need to do is you need to focus on this one critical number. You need to focus on the average dollar rate of revenue earned per hour that you pay. A lot of firms focus on an average rate of revenue charged to work in progress. Waste of time. It's a relevant number. It tells you some story. But at the end of the day, if you were to divide the revenue that you generate out of the number of hours that you've paid, both to principals and to your fee earners, which are your solicitors, your paralegals, your legal secretaries, you look at all of those hours, and that will then tell you what that rate is per hour for the work done. And that key number by itself, from a profitability perspective, is a number that you've really got to focus on driving activities to increase. Because the higher that number and the bigger the gap between what it costs you for every hour and what you generate in revenue for every hour produces what's called your gross profit. It is the ultimate indicator of profitability in a firm in terms of how much of that labour cost are you recovering, and the bigger the gap, the bigger the profits. So that's why it's so important. It drives gross profit. So what's that, you might think? Gross profit. A lot of firms don't really get that. A lot of firms, when I get their financial statements and tax returns, I have a good look through how their accountants are recording it. And usually I see a top line that says revenue, and then their labour cost is spread down in their normal expenses. But what gross profit is that it's this. If you've got 100% of your revenue, you take out the direct labour, and that's your fee earners, which includes your paralegals, but excludes principals' salaries. So it's your labour cost for incurring the work. It does not include your receptionists. It does not include your practice managers. They are included as an overhead. And so the difference between the two is your gross profit. The good firms I see drive a number of a minimum of 75% gross profit. So their revenue that they generate from their labour cost is 4+ times that labour cost. Then comes out your overhead, and what's left out of that is your net profit. So what we're talking about here is your gross profit. We're talking about that relationship between the cost of your labour and the revenue that you generate from it. There is no other focus that you need to have in your practice around driving better profitability. So the key is to focus on gross profit. So you're going to focus on some key KPIs, some core numbers. For profitability, you've got to be focusing on what to drive improvements in that average rate. What's your productivity? So how many hours that you're paying people, how many of those hours are actually being charged into work in progress? Or how many hours are actually being worked that's billable by clients, by your team to clients? Then how much of that is actually charged to clients? So what's the difference between how much they've charged into WIP or amount of work they've done and what's actually being billed? So it's the write on or write off of that time that they've spent. And those two numbers will then drive, as well as the price that you charge, the average rate. What you also need, that's from a profitability perspective. What you've also got to be focusing on is strategies to what I call reduce the cash gap. And that's the period of time between when a client signs a cost agreement or gives you instructions and when the money finally ends up, all the money for doing that matter, ends up in the bank account. So you've got to focus on your WIP days and your debtors days. So WIP days is the period of time that you've got people spending doing the work that hasn't yet been billed. So the percentage, if you like, of the overall revenue for the year that hasn't yet turned into debtors. So what's billed to clients and haven't yet been paid. And that's your debtors days. You then focus on the period of time between when you bill it and when you get the cash. So what you've got to focus on is a two-pronged approach here about driving improvements in your profit and cash flow. You've got to drive strategies in your firm that are focused on increasing your average rate. And your average rate can only be... I just realised I've got average charge rate there. It's your average rate you've got to be focusing on. You've got to be focusing on increasing your revenue, reducing your costs, or a combination of both. And then you've got to be focused on getting your bills done more quickly and getting that cash collected. Pretty basic stuff. But that's what most firms don't focus on. So Mel, back to you. You've been sitting there quietly. I know you've listened to me spruik about and talk about KPIs a lot. What I want to do now is explore a little bit more detail into your firm. I want to explore now in terms of your understanding of these KPIs and some of the actions that you've done. Because over the last quarter, we monitor your KPIs, these key KPIs, every month. And what we've seen is a change in your average rate, which has moved from $52 per hour to $91 per hour over a quarter. So tell us about what you've done and the impact that's had in your firm.
Okay, well, it's been a bit of a slow process for us, but
in your view, I think, Mel, but in terms of most firms, you've actually achieved a lot in a short time.
Oh,
Don't
good.
be too
I'm glad
hard
to
on
hear
yourself.
that. Well, since you came to visit us, it really was like having a light switched on for us. There were a lot of things about our business that we hadn't paid attention to. one of the particular things was we needed to focus on some of the people that we had in our office that were causing inefficiencies. And within a few weeks, we had audited one of our key billers, how much time we put into getting that person to bill. And we were very surprised that between Stuart and myself, we'll put in some 40 hours into making this person productive in 1 week. So we did have to focus on staff and productivity, and that has made a huge difference. But of course, we really had a bit of a process that we had to follow, and we didn't achieve that until December, January. We're satisfied with our fee earners within the business. So that was a really important thing for us.
So Mel, just on that, Mel, so you effectively stopped what you had previously been doing, drew a line in the sand, and went back and audited your business in effect. You had to look at what was actually happening with people on a daily basis. What was happening with that cost and the recovery of revenue from it?
Yes. And that's something we hadn't focused on before, so the numbers were pretty alarming once we had a look at that. So I think that was our first very important move for us to change our numbers. And then from that point, we had made a plan, which breaking that plan down into the quarterly plans, which we look at now, we had a real focus on what numbers we needed to achieve each month to reach our target for the quarter. So, of course, we were focusing on fee earner productivity and also providing training within the office so that our team could reach the efficiencies that were required. Whereas before we were always focusing on having a system in place, but really we had failed to communicate the message of what our firm needed to achieve for our billers.
Yeah.
So I guess, as far as reaching our billable hours, we didn't know what we weren't billing because we weren't recording time before. So another important thing for us was, of course, capturing all of our billable time and also looking at how quickly we could bill our files. So we have introduced file velocity policies and procedures. So whenever we open a file now, we have a strict procedure that we follow, and particular matters have different velocities attached to them. So, for example, we would have a development file previously that we would basically finance until we'd reached completion. So we would bill it once we'd reached a significant milestone. But now with our new policy, we bill at intervals, and we would bill, for example, 25% at the beginning and 50% halfway through, and then 25% at the end. So we're effectively getting 75% of that file, a lot earlier than what we had previously done.
So we'll come back to cash flow shortly. But there was a really important piece that I'd like to explore a little bit further with you in something that you said. You said that you basically didn't time cost. So you guys use Leap?
Yes, we do.
So you're a Leap user, where I'd be very surprised if there wasn't a good proportion of the participants today that use that software. But 50 to 60% of your revenue you generate is from conveyancing, which is fixed fee, isn't it?
Yes, it is. Yeah, we weren't measuring. We thought that we had our fixed fee set at a rate that meant that those files were productive. But we actually have been surprised when we allocate our time to those files. They're not as efficient as what we thought they were. But now that we actually have the time that we can review at the end of each month, it is amazing what you can see you can change within the firm to improve efficiency. And the numbers at the end of each month, for me, the numbers tell me something new that I can improve all the time, and I feel like at the end of each month I'm understanding them more, and they're telling me a whole lot more than what they did, say, a month ago. But we really had no chance to improve any numbers before because we just weren't recording that time.
Yeah, there's an old saying, "What you can measure, you can manage," and I have another saying that hope is not a strategy, and that's how most people manage their firms. Is that they make their decisions based on gut feel and hope for the best, and
Yep.
the reality when it comes to numbers is that they're often wrong.
Mhm.
So
And another thing for our GP side is also that now that we're time costing it, we're finding our files are far more valuable than what we ever thought they were as well. We're really underselling ourselves.
So the combination of all of those things, of understanding the raw cost that goes into to doing the work, um, the 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 efficiency and the productivity of each of your team members in doing that work, um, and having that raw data there so that you know what's actually happening has really driven change in your firm, which has moved that average rate over that particular quarter from $52 an hour as a starting point up to 91. And
Mhm.
so, it's really like Einstein's definition of insanity, doing the same thing over and over again and expecting a different result. What you've then gone and done from a profitability perspective is you've gone and worked out what the key strategies are that you need to implement, made decisions on them, and then implement it. And what you've got is a vastly different result. So, Mel, just want to move on to cash flow now uh, because it's an important part. What I see in a lot of firms is cash flow produces a lot of stress for firms because they worry about paying their bills, which is great, but there's a very limited amount of credit that is provided by suppliers to legal firms. Most of it's wages and rent and IT and that type of stuff. And because of that, it's paid every week, fortnight, or month, sometimes in advance, sometimes in arrears. But but without strong cash systems in your business that produce that good cash flow, it creates a whole lot of pressure. And without the structure, the behaviours of that business are quite dysfunctional. The businesses, you've got to keep an eye on your cash flow, but businesses that worry about their cash every single day force them to implement activities that are focused on paying the bill tomorrow as opposed to building and growing a successful firm long term. So I want to just explore a little bit now about cash flow and some of the changes that you've made in your firm since joining FWO Growth Club. So tell us a little bit how you managed your cash flow 6 months ago before you started making any changes.
Okay. Well, we didn't really manage our cash flow very well. We spent a lot of time worrying about it, and we didn't. We certainly didn't feel like we could control our cash flow at all. But with our conveyancing, of course, the general velocity for those files is around 30 days, so they didn't really have such a cash flow issue as our general practice side did. So as far as the general side, we have introduced a file velocity policy, which basically means that we're setting expectations with our client at the beginning of a matter, and we're setting billing targets where we will bill at intervals throughout the file, and we're in control of how our funds come from our trust account into our general account, because our fees are generally retained in trust, and then we just follow a billing schedule on that particular file. So we now have a nice steady cash flow and one that we can plan around and control.
So Mel, so trust cash into trust, is that an exception or a rule? What happens does this happen every single time?
Well, of course, for our conveyancing, yes, it does with the purchases. In the general side, we now, a majority of our GP work comes into trust. and it is part of a qualification process as well with new clients that we don't want to be debt collectors, and we certainly want to be in control of when we can get paid if we've done the work. So, and we do use discretion, of course, because there are some clients that it would just be offensive to ask that when you've had them for years, or if they're a bit more of a corporate entity.
But the discretion's an exception rather than the rule, though, isn't
it? Exactly. Yes. So we have changed quite a lot to achieve that, but it's actually very easy to achieve in the discussions with the client. If you're very open about the billing process, there's really nothing to hide from. Before, we didn't like having that conversation, and really by the time we got our bill out, we weren't sure of our value anymore, because we just delayed it and we questioned ourselves constantly, where now the expectation is set. The client has happily put the funds in our trust account, and we have a nice cash flow as a result of that.
And how, out of all those, just say over the last sort of month or two, how many clients have said no, they won't do that?
We actually have clients saying, we had one in our office the other day asking us if we were could we increase the bill. They thought it wasn't enough. So there's definitely no problem. He's a lovely client, actually.
Yeah.
But yeah, there's absolutely no problem with our clients. They just see it as part of the process. And in fact, the ones that we do that with, we tend to have less problems with them, because the standard has been set, and they seem to see us in a bit of a more professional manner, whereas if you don't set the standards, some people take advantage more than others.
Yeah, exactly. And the key with cash flow, Mel, as you know, is that what most firms do is that their cash flow is managed in a way that suits the clients first. And you can't run a business like that. You can't drive a car without petrol. Some cars you can, but hardly any. And cash is like the petrol for your business. So what you've got to do is you've actually got to design your cash flow systems so that they reduce that period of time between when instructions are given and the cash is collected at the end. But they've got to be designed in a way that suits the business first, not the clients. So you don't go and buy a car and drive it out and say, I'll fix you up in a month or so for it. If that money's not in the dealer's bank account, you won't be driving that out the door. You finish building a house or renovating a house, that builder's not going to give you the keys to take control of it again until you finish the work. So they're just some examples really there of really controlling your cash flow and designing it. So Mel, just in maybe 2 or 3 quick points. Can you just summarise for us there what those key cash flow activities are? You said around engagement.
Yes, engagement. Of course, our WIP days, reducing our WIP days has made a significant difference, and also capturing exactly what our time is and billing accurate fees, and being able to control when we draw down on our fees as well.
Yeah. So you've what you've done is you've said, okay, what we've got to do is we've got to fix our profitability by making sure we're maximising the amount of revenue that we can generate from the work that we're doing for the costs that we're incurring. And then we're saying, well, we want to make sure that we're not a bank, and we're going to make sure our cash flow systems align to what we need in the business to be able to fund it. And this is before we've even sort of started working on strategies to win more work, and around your product and your marketing activities and your sales activities to drive even more inquiries and revenue into your business. And it's a very key point, because unless you get this platform built and these key fundamental profit and cash flow drivers under control in your business, as a business grows, and property and development law is definitely in this category. You are going to be in a much more structured and organised way to handle that growth. So, Mel, just to wrap up, what recommendations would you have for firms today around taking the first steps to drive profit and cash flow improvements in their firms?
Well, I think, of course, monitoring and gathering as much data as you can as far as time entry has been a critical process for us, which has allowed us to become very familiar with our numbers. I think without that information, it wouldn't be possible for us to continue to know what our next step is. We're so engaged in our numbers now that we're creating dashboards, and our decisions are often made around Excel spreadsheets now. So I really think that getting to know your numbers is definitely a critical thing, and looking at your efficiencies and the number of WIP days, and of course cash flow management. As far as setting a standard, our fire velocity policy has worked really well in our firm, and everybody understands it. So we've implemented that by having regular Wednesday sessions, we call them, and we are communicating exactly what is required for us to reach our targets, and everyone's well aware of what our targets are as well, which is just getting everybody involved in the process.
Yeah, fantastic, and I think the firms that participate in FWO Growth Club in particular, I think when they start out, they really just don't know what's possible, and once you sort of step back and get some clarity around what it is that you need to be doing, and recognising that your business is really no different to any other firms. And getting excuse me, getting focused on those key actions. What it does, it really focuses you on what you've got to do to achieve your results, and then what's possible. So Mel, look, thank you very much for your time today. Really do appreciate everything that you put into this webinar. Congratulations on the successes. You're only just starting out, and I think you've got some great opportunities ahead of you.
Thanks, Matt. Thanks. We're really enjoying the club, actually. It's really great for us.
Excellent. So thanks for that. So just moving forward, if as always when I can conclude these webinars, I put a free offer out there for anybody who's listening in today. To just for the first 15 to email me at matt@fwo.net.au. I provide a free 45-minute online meeting to assess your firm's profitability and cash flow, which is fundamentally how I first met with Mel and Stuart, where we get a few core numbers from you, punch it into our calculators, and assess what it is that you need to be doing in your firm and start getting you focused on that. Some very exciting news on Friday of this week at the Queensland Law Society Symposium, or not at their symposium, but in conjunction with it, we are launching growyourlawfirm.com.au, which is going to be, or it's a website that's full of content there for legal firms to use. Our clients get this complimentary, but there is going to be a whole lot of content produced in there that you can use within your firms to help drive improvements in your profitability and cash flow. There are DVD workshops to engage with your teams. We've got recorded tutorials for better understanding. There'll be guides and tools with calculators to be used, things like KPI monitoring tools, some strategic planning documents, capacity management, efficiency calculators, sales management tools, a whole lot of things that will be in there and developed over time. Lots of articles, and something else we'll be producing is some marketing tools for you to be using in your firm. The first quarter, we'll be having plenty of content on there around fixing the profit and cash flow, all around doing the work. And as we add content to it over the coming years, that will keep growing in all areas of your business. So watch this space. We'll be having a launch on that a bit later in the week. Our next Grow Your Law Firm webinar is on Wednesday, the 23rd of April this year, and it's about structuring for succession. I'll be talking to some other clients around how we work with them around developing strategies for succession in their business, and that's both for principals buying into their business and principals retiring from the practices. So we'll give you a really good insight into what practitioners are doing in that regard. We also have just realised this says 28th April 2013, but our next FWO Growth Club is commencing on 28th of April 2014. So the practice reviews, just like what we've done with property and development law to kick them off, will be happening over the next month, with our next workshop commencing on the 28th of April. So if you're interested in joining that next FWO Growth Club group, just email me at matt@fwo.net.au. So thank you very much for everybody today for listening in. Thank you again, Mel, for your participation today, and all the best. If you're at the Queensland Law Society Symposium this Friday and Saturday, please drop into our stall. You can't miss it. It's the first one as you come up the escalators. As a major sponsor, we actually get a pretty good position there. So drop in and say hello, introduce yourself, and it'd be great to see you. So thanks again. Talk to you next month.